So the halving or halvening, we've heard it both ways, is the event that happens approximately every 4 years. It actually happens every 210,000 blocks. So it's approximately every 4 years, but not quite exact. We can't pin it to the date always. We think it's going to happen around April of this year. And this is where the Bitcoin code already has programmed in the protocol that every 210,000 blocks, the reward that miners get for each block gets cut in half. So when Bitcoin started, it was 50 Bitcoin per block. So 50 Bitcoin were being released every 10 minutes. About 4 years later, that was cut in half to 25, then to 12.5. And now we're currently at 6.25, and then it will go down to 3.125. So that's why the supply of Bitcoin goes up really fast, and then it kind of levels out. So it's kind of asymptotic, or whatever the mathematical term is. And that's why we have about 19.3 million Bitcoin already out there in circulation mined today. But it's going to take to the year 2140 to get to that almost final 21 millionth Bitcoin. And so that's why the supply curve looks like that. It shoots up and then slowly goes out. So, of course, there's a number of implications here. The supply coming online on a daily basis gets cut in half. So Economics 101 says if demand stays the same, then all else equal, price has to go up to account for that, the lower supply. There's obviously some implications for miners. We haven't talked much about Bitcoin mining yet, Matt, so curious to hear your thoughts here. Their income gets cut in half, their reward, right? And then, of course, there's a number of other implications as well. We've touched on a little bit of, well, what happens when this keeps going down? You hear talk about Bitcoin's security budget, if you will. The budget that is incentivizing these miners to keep the network secure, that gets lower and lower. So what does that mean for the outlook for the security of Bitcoin longer term? So that's the basic of that, Matt. I'll let you share your thoughts as well here.
I think that was well said. I mean, it's a supply shock ultimately that we're going to experience. It's less Bitcoin coming onto the open market every day that theoretically would be sold by the miners. But it's really the demand that needs to drive this from a price perspective going forward. So it comes at a fascinating time where you have these ETFs coming online and you have these private wealth platforms and RIA channels that probably will be starting to roll out these products on a solicited basis right around that time. So could be really interesting. It's always been fascinating to see the price of Bitcoin, though, at these halvings. It's not that it just goes straight up, right? And I think some of these models that just say this is all supply driven, I don't really buy into that. So I think it's really the demand. You brought up the miners. That's interesting. That's a big public equity play in the US. These miners, I think a number of them will be really struggling in the face of this, especially in the first few months of this. They really need that price of Bitcoin to go up in order to offset what's going to happen here in terms of just net new supply of Bitcoin that they'll be mining every day. So I think you'll see increased competition. I think you'll see miners go out of business. I think you'll see more miners that actually have access to renewable energy at low costs compete well in this market. So things like flared natural gas mining and things like that. So I'm really excited for it to get an ETF and the halving. I mean, I feel like that's two great things from a narrative perspective in 1 year. It'll be fascinating.